As we kick off December, the data is looking a bit better than what we saw earlier this fall. Jobless claims still running around 216,000, which tells us layoffs remain low and companies are largely holding on to workers. We're also starting to see some stabilization in manufacturing. One of the major PMI readings came in at 52.2, signaling modest expansion. And holiday spending got off to a solid start. Online sales over Thanksgiving weekend hit new highs, though you can clearly see consumers being more value conscious and selective in how they spend. The big focus now turns to next week's Fed meeting. We'll get an updated dot plot, essentially the Fed's roadmap for where rates may go in 2026. Markets will be watching closely to see whether officials lean toward a cut or signal that they want to stay patient for a little longer. There's also been some buzz around who might take over as Fed chair once Chair Powell's term ends next year. Kevin Hassett's name has surfaced as a potential nominee, though nothing is final yet. Either way, the larger driver remains the economic backdrop: steady employment, cooling inflation, and continued investment in technologies that are helping workers become more productive. So what does this all mean for investors? Well, volatility is normal this time of year, but the broader foundation hasn't changed. A resilient, though value-focused consumer, improving data, and long-term productivity trend continue to support a disciplined, diversified approach as we head into 2026. Thanks for watching, and I'll see you next week with more insights.